What's going on, everybody? Michael Silva here to do some technical analysis on the financial markets. This here is the market brief. We do this Monday through Friday to get a good grasp as to what is taking place in the markets. In today's video, we are going to cover the SP500 on the daily and the 30-minute time frame. We're going to look at the NASDAQ 100. We're going to look at the banking sector, which is very important, and I'll tell you why here soon. Then we're also going to bring in the 10-year bond, gold, silver, and the US dollar. A couple other elements as well. Let's get into it. All right, welcome back. The first thing that I want to point out here is the S&P 500 chart that we talked about on yesterday's market brief. Now, on yesterday's market brief, we showed the monthly time frame on multiple different sectors, and we showed the broadening wedge pattern, the megaphone pattern, and then we also saw some very scary things taking place from a reversal type candlestick pattern. So if you haven't seen that video, links right here or in the description below. Make sure to watch that video. Now what we're going to do is look at the daily time frame, and we discussed this chart yesterday. All charts are linked in the description if you want to watch these charts yourself. But what we were saying was there was this pinned area between the 5 EMA and the 50 period, and today we broke down to a low of about 32.92. It was 32.92 and 40 cents, and we bounced from that point, but we closed beneath this 50 period moving average for the first time in quite some while. Now, we made a new low on a Friday, and making new lows on a Friday doesn't always happen. This is more of a rare type event. It happens sometimes, but it doesn't always take place. So in my head, if we closed a low on a Friday, we'll probably see continuation to close lower into the following week. So we'll see. Now, stimulus could come out, and that could bring the S&P 500 up, 100, 150, 200 handles in a snap of the finger. So we also got to take that into consideration. But the way the chart is looking to me, this looks like the fall can continue. That's why we have this target box right around 3,200 to 3,220, this zone. And that might very well set us up for a good opportunity to start buying that dip. We will see how next week rolls out. Here is the S&P 500 on the 30-minute time frame, and the link is in the description below. But what I want to just kind of point out here is just the areas of resistance are lined out in red, and then the area of support is lined out in green. So clearly we have quite a bit of resistance, and we saw this pullback earlier today, and then we bounced from that point. We did close below 3,330, so that's good for the bears. But as you can see, we did start bouncing from right around 3,300. To really see some more downwards momentum, this might be just a little dead cat bounce here from this pull down, but we need to get a close below 3,300. That'd be giving me more confidence that we're going into 3,200. Now, if you pull open this chart by yourself by the link in the description, you can create trade plans around these levels. So if we start pulling down into this level, you might be able to put a tight stop loss and buy that dip. Or you might be able to fade a position if it runs into resistance, or if we gap up and then we pull down to 33.30, that might act as an area of support, because once resistance is broken, it then becomes a level of support, so you can put a tight stop loss right there. So this is, you can use this for your own personal use if you're an intraday trader. Let's go ahead now and move over to the NASDAQ 100. So here's the NASDAQ on the daily chart. I just wanted to point here that we did close significantly below the retracement level here, 23.6 on the Fibonacci retracement, and we're below the 50 period, we're below the 50 period as SMA, and then the 5 EMA saw that little lower wick here, meaning the bulls kind of stepped up, and that kind of happened right there at the bottom of the Bollinger Bands. So this looks like it's starting to roll over. We're starting to see pressure on these tech stocks, which could very well make this market sink. Now, there's a lot of talk about sector rotation out there, and that might very well be the case. But you need to understand, when it comes to sector rotation, the rotation outside of those stocks might not be enough to hold the market up. So to take the sectors that were underperforming to be able to lift them up might not be able to withstand the pressure coming off of the market cap from these bigger FANG-man type stocks. So this is why you can see the markets start to correct themselves. Here is the KBW Bank Index. Now I want to get into the big picture of things, what I'm seeing. Basically, S&P 500, the NASDAQ, gold, silver, US dollar. What am I missing here? The banking index. I might have not mentioned that, but everything was just kind of going sideways, and the 10-year bond, all going sideways, coiling up tighter within their patterns. And this to me is not necessarily a cause for concern, but it is telling me that something's gearing up for probably a significant move. So there's going to be some fireworks that are going to take place between, next week all the way till 3 months out from here. Now, we've already looked at the seasonality chart of what takes place in months like September and October during an election year and not during an election year. And there's typically a lot of pressure within those months. So I think that there's going to be some fireworks taking place here in the near future. The reason why I want to show the banking index, and we'll go to the 10-year bond after this, is just notice, first off, the NASDAQ 100 versus the banking index, which this is the 25, 24 top banks in the U.S., the largest banks, institutions within the United States. So it's not all the banks, but it is just the major sector. And as you can see, we have the NASDAQ 100 just ramping up, breaking its February all-time high. And this is really driven by the tech mania, the tech stocks. And you can see the February high here. It was actually higher in the early 2020, but we have not even came close to recapturing that fall to the downside here during the COVID pandemic. So we have pressure on the banking sector, but we have a lot of help from the Federal Reserve. So we have pressure here, but it's all kind of going into select stocks. And this is a cause for concern because we're starting to see just a lot of sideways movement in the banking sector. There's going to be two things that happen here, okay? What I'm trying to point out is basically you have the banking sector and then you have the FANG stocks. And there's something's going to happen. One way or not, they're going to catch up to each other. And I don't know how they're going to catch up to each other. Either the banking sector is going to catch a bid, and then we're just going to see the banking sector make all-time highs, which to me seems like it's not going to happen. I just don't think that's going to happen. You saw Berkshire Hathaway or Warren Buffett move big positions out of a lot of banking sectors, banking stocks, okay? Other than his Bank of America, but we saw a lot of money moving out of the banking sector. And if you look at this chart right here, this is the banking sector in this symmetrical triangle. It's going sideways for weeks. This is the weekly time frame. Weeks just going sideways and just building more pressure. When things consolidate like this and it's in bearish momentum, you have the 50 period sloping down. It's below the 200. The 5 EMA is pretty much tracking sideways. Actually, that's a 10 EMA is just tracking sideways. And it just doesn't look healthy. So a break to the downside seems likely in the banking sector. And that very well might mean in order for the NASDAQ 100 and the banking sector kind of catch up to each other, it seems to me like the NASDAQ would be the one to fall and the banking sector might just either one go sideways or fall a little bit more. So something's going to take place here. Not too sure what it's going to be, but I just don't see how the NASDAQ could continue to run up without at least, a significant retracement. And we pulled up a very important chart in yesterday's video that I showed where it could potentially pull back to. So if you haven't, once again, watched that video, I do show some pretty interesting charts there. But yeah, take note of this sideways action taking place here on the banking sector. And now I want to bring up the 10-year bond as well. And you can pull up the 2-year bond, the 10-year bond, or the overall bond market and just look at them all. But I'll pull up the 10-year bond for right now. All right, so this is the weekly for the 10-year bond. And really what I'm seeing going on here is also sideways action. Now we saw some, a nice big pull right here, and then it's been kind of consolidating and getting tighter and tighter within this channel here. And the bond market, I like to think of it as a kind of a forward-looking indicator. I don't think the bond market's going to lie. So you can get a really good grasp as to what equities are going to do by looking at the bond market. It's somewhat forward-looking. And depending on where the yield is, it could kind of determine the expectations for future growth. And what I'm seeing here is just this sideways move right around 0.7, and it's been kind of pinned here between 0.60 to 0.75 here for weeks. So we got to watch this, because if we start seeing this go down, that might be the forward-looking indicator that we're going to see continuation to the downside in the equities markets. So the NASDAQ, the FANG stocks, the FANGman stocks, the SP500, it can start applying a lot of pressure there. Now, we did recently break out of this trend line, and yeah, I am short-term bullish because I think that with this breakout and these positive divergences, from a technical standpoint, I can understand why this can go up. However, I'm long-term bearish. And if we start seeing a continuation to the downside, I mean, who knows how low this can go? Some people say it can go negative. I don't know. I'm not that smart, but we got to keep an eye, because if we do start seeing this roll over again, it's going to apply a lot of pressure on the equities market. Here is the US dollar, and we've also been watching this one very closely. Very important chart. And we broke out of this channel, but yet we're kind of pinned within another sideways trading range. So a lot of the markets are just trading sideways. They're just going like this. And as you can see here, this is pinned between 0.935 and basically 92.50. But the overall trend is bearish. Okay, you had the price action below the 50. Clearly the other day we ran into that and got rejected. The 200 is above the 50, clearly sloping down. So very bearish looking for the dollar. However, the intermediate term, or short term, I should say, trade could be very bullish. And the reason why it's bullish is because we broke out of this channel. It's forming a bull flag. Makes sense that we can potentially see it go up in the short term. However, it's not going anywhere at this particular point in time. You need to watch out for the dollar, because if we start seeing pressure to the upside on the dollar, it's also going to apply pressure into the equities markets, into gold, and into silver. Clearly, the trend line that it recently broke out of is holding as a level of support. So if we start getting below this trend line and heading back lower, I can definitely see us crossing below the 92 handle for the dollar. Here is the CPC. This is the put to call ratio for the options. And this is the total, okay? This is where there's three ones you can look at. You can look at the equity, you can look at the index, or you can look at the total. The equity side of things, the CPCE, that is looking at more of the retail trader's perspective. And typically what you see with that is it's always below 1, because it's typically more bullish. And then with the index, CPCI, I think it is, that one is typically above 1, because it's more institutionals placing hedges using the derivatives markets options to hedge their long position. So this is the CPC. This takes into counter both. And when it's below 1, it means that the overall market sentiment, at least in the options exchanges, is more bullish. So yes, it is below 1, meaning that it is bullish. Now, that is the overall number closed at 0.94. But this line here is the 10-period moving average, smoothed over 10 periods. So the reason why I'm showing this, it's a little bit more of a lagging indicator, but it gives us insight as to when could be a good time to start hedging bets, to potentially sell or take profits from long positions. And what we started doing was when it crosses above 0.8, we said, hey, that is the sell signal. We call it a sell signal, which means, like I said, take some profits, don't go long right here, maybe wait for things to kind of play out, see what's taking place. And since that point really crossed over, we've been kind of going sideways. But as of recently, now we're starting to see a little bit of momentum to the downside. And what we stated in previous videos was that doesn't mean that a crash is going to take place. That's not what it means. But what it does mean is we need to look for areas of support that the price action could potentially pull back to when it crosses this line. And the areas of support that we looked at with the SP 500, and that's that chart right below, we're mapping out about 3,200 to 3,220, 3,250, right around that pink box. I think that is a good target area where we might see more buyers step into play. So watch out for that area. If we closed on a low on Friday, which, like I said already, doesn't typically happen, that momentum can very well carry into Monday and to next week. So we very well might even come down to that level next week. It's possible. It's not for sure, but it's possible. Here is the NYMO. This is the breadth indicator. It allows us to see what's taking place in the markets. When it's below 0, there's a negative breadth. And it's really honestly been below 0 now for quite some time. And we just recently picked up and crossed right above it very fast. And what we were saying in previous videos was when we crossed above it, and I missed that, but when we did cross right above it, it could represent a good opportunity to get in short, depending on where the price action was. And me personally, I didn't think the price action was in a good area, and that had happened within this week with all the events taking place. We had Apple event, we had Quad Witch, we had VIX expiration. What am I missing? I feel like I'm missing something. There's a lot of things taking place this week, and that's why we saw this really choppy nature within the market. But as you can see, we did start rolling over a little bit deeper, closing below that area of support. So far, the bears right now kind of have the upper hand. Now, it's an overall bullish context. Okay, the market's in bullish context, but remember, bullish context can change to bearish context. You got to look at two things. You got to look at the trend and you look at the trade. And right now when we scope in, we're looking at the trade. And bearish trades can eventually lead to bearish trends. That doesn't mean it's going to happen, but what the technicals are telling us right now, the bears have the momentum to the downside. And will it continue into next week? I mean, I think it will. Personally, it looks like it will, but we will see, right? We will see. Here's the VIX, the Volatility Index for the S&P 500. And we had a down day today. I mean, it's Friday. It was quad witch. We kind of expected that to take place. When that happens on these kind of weeks, which are, you know, far and few between, obviously Fridays, you can see some pressure to the downside on the VIX, but on quad witch, you typically see some pressure to the downside, and we got a down day on the VIX, still within this kind of flag pattern, close some of that 30-minute gaps that we discussed yesterday. Not much to talk about here. We might start rounding off here. I think that we can potentially go a little bit lower. It might be very well possible, but we will see. If we start breaking above, that can send us a lot higher. But this lower box right here, this gap, that gap, something's telling me something's off right here, having that and holding that gap before we see a larger move to the upside. So I'm waiting and thinking that this is going to get filled here in somewhat the near-term future, but we will see. All right, so now I'm going to quickly discuss gold, silver, and Bitcoin. And this goes to the whole narrative, what I've been saying as far as things have just been going sideways and coiling up, preparing itself for either a big move to the upside or a big move to the downside. How do we know if it's going to go up or down? Well, we can look at things like the banking sector. You know, it's a big sector. We can pay attention to what's taking place there. And if you scope out even more, that's a very simplistic thing. You can look at the bonds and the yields and what they're doing. And they're also going sideways. But if we start seeing a breakdown of the bonds or maybe a break up in the dollar, we start seeing a move higher, that's going to apply pressure on all these other assets. And we might, which I've seen in the past, you can see when the bond market moves a certain way, it could be a leading indicator for the equities because it's forward-looking. It's basically placing in future expectations for the equity markets. So keep an eye on the bond market. I like to look at the 10-year bond. I also like to look at the 10-year minus the 2-year or even just the 2-year. But the 10-year minus the 2-year constant maturity rate, you can pull up a chart from the Fred website, and it shows the S&P 500 overlaid with it as well. Talked about that in previous videos. So here's gold. Gold's moving sideways, playing peekaboo with this symmetrical triangle. I have it drawn out as a descending triangle, but I could technically make it a symmetrical triangle. I just have this area of support here that, you know, I'm just kind of keeping an eye on. If the price pulls back into there, I was mentioning that I might buy a little bit more, maybe another ounce, but I'm just kind of holding off, waiting to see, you know, if something bigger takes place here. If you look at the MACD down here, it's kind of curling off. Looks like it wants to start crossing over and then potentially heading higher. I mean, it does look very bullish. The trend is bullish. The trade looks bullish. I feel like it can go higher, but also from my perspective being a bull, I would not mind to see this thing just drop like a rock back down to the previous levels here on where it used to break out. That's healthy in a bull market, and it would be nice to see. But, you know, I don't know if it's going to happen or not, but you got to be prepared for if it does. Because if we start seeing gold drop from 1962 down to 1800, people are going to lose their mind. They're going to say, oh, gold's the worst, this and that. Things are, you know, it's not a safe haven. It's blah, 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 blah. But as you can see, there's a lot of support in the previous history of the chart there. And if you're long-term bullish, that just represents just an excellent purchasing opportunity. And then we have silver doing the same thing as gold, continuing sideways within a symmetrical triangle. Bullish context, something's going to happen here. I don't know when it's going to happen, but something's gearing up, okay? Everything is coiling up. The market is getting tighter and tighter and tighter, moving into election year, the end of September and then October. These are big months for the stock market. Something's happening. Something's taking place. Take note. Take charge of your money. Be ready for when things start to move. Now we have Bitcoin here, and we put up this red dashed line. That's the area of resistance that we're keeping an eye on. And Really what needs to take place? Well, we said a few things. One, that's going to act and resist. So if we get a ramp up, that could be an overextended move. We can get rejected. That looked like a dead cat bounce on the weekly time frame. Or we can maybe potentially move up, track sideways, create kind of a flag pattern or symmetrical, which it's doing right now, coils up, and then we break above it. That would be healthy for the bulls. And then what we need to see is a couple daily closes above it, maybe even a weekly, and then you can hold that range. And then once resistance is broken, it then becomes a level of support. So we can hold that area as a level of support. That would be healthy for the bulls. Now this bear flag, that was bearish, but they managed to break above it, and now we're forcing into that area. So once again, this is China just in a range, not telling us it's right now. It's not a good trade. Right now, this is a complete speculation trade right here, because if you play this as a bull flag and to the upside, I mean, you're at 10,096 and you have 11.2 right overhead, big area of resistance. I wouldn't play with that. However, if we coil sideways more and we're kind of building up higher lows into this 11.2, so it looks like this, that might be a better position, especially if we start getting above the 50 period moving average right there. That would be setting up a launch pad. And you got to understand the context of that trade. It's building up higher lows. So that means that the bulls are making progress to the upside. They're getting closer and closer to the area of resistance or that bear's camp, and eventually are going to overtake it. That's what a launch pad setup looks like. So if we get a little bit higher and start doing that, that might set itself up for a good speculative trade as well. And I say speculative because it hasn't fully confirmed the breakout point yet of that resistance. So that's all I got for you today. This little nugget down here wants to say goodbye. She was sleeping. She's like, put me back down. All right. Have a good weekend. On Saturdays, look for the weekly scan. That's where I'm going to go over some stock picks. You know, this has been an interesting week here in the S&P 500, in the other indices. So, I'm interested to see what I can find going into a week where I potentially think it's going to be going down. So we will see. Have a good weekend. Talk to y'all later.